Hey everyone, Jonathan Lee, real estate sales representative based out of Toronto with Keller Williams Realty. It's fall of 2022 and interest rates just rose for the third time this year by 0.5%, bringing the Bank of Canada overnight rate at this moment in November 2022 to 3.75%. Actual bank mortgage rates are around 6%. Some of you on variable rate mortgages either have an adjustable rate, meaning your monthly payments have increased with each change in the prime rate, or you have hit your trigger rate increasing your monthly mortgage payments. The trigger rate is the rate at which your mortgage payment increases to ensure you're still paying down a portion of the principal. As a real estate owner, you may be stressed right now, but an important thing to remember as you contemplate your options is this challenging period will pass. It's expected that we'll see at least one more rate hike before rates plateau. I personally feel like we're pretty close to the rate's peak, but exactly when rates will stop rising will only be determined by the Bank of Canada and the inflation rate. The Bank of Canada is doing everything in their power to squash inflation, even if it means throwing our economy into a recession. And yet, how much more they can depress inflation is a big question. A lot of today's inflation is actually being caused by broken supply chains and a lack of supply more than it is by overconsumption of goods and high demand. So the sentiments in the industry is the portion of inflation that was in their control has mostly been tamed. Mortgage payments may become more expensive than they are now, but won't be expensive forever. So when considering options to deal with this pain of high rates, consider how long you'll be able to endure it. Sometimes the enormity of negative possibilities makes things feel so overwhelming, but one way to explore this is to consider your mortgage rate rising to a level that is unlikely and pondering, is this a level that you can sustain for 1 year before rates drop again? In today's video, I'm going to talk about some options you as homeowners and investors can exercise if you're financially struggling. Suggestion 1, lock in now for a 1 to 3 year fixed rate mortgage. It sucks because you missed the boat on low rates, but if you absolutely can't risk rates to rise anymore and you can manage with what you have now, contact your bank or mortgage broker and consider locking your rate in for at least the next year. The displeasure of having missed out on a much better rate just a few months previous is frustrating, but in dealing with the present, we can't dwell on the past as those moments are already gone. Suggestion 2, lease or rent out a part of your home. I'm going right for the jugular here to help you handle costs. This is likely not a comfortable or convenient option for homeowners who enjoy their privacy, but there is a housing crisis in Toronto and many are struggling just finding a place to lay their head. If you have even one extra room and a bathroom that you can share, rent it out on a month-to-month basis. A room rental can fetch anywhere from $500 to $1,000, and there are many profiles of people that are in need of a place to live even if it's somewhat temporary. Be upfront with what you are looking for in a tenant and be transparent that this is not meant to be a permanent solution for either of you. If you are sharing either a bathroom or a kitchen with your tenant, you are absolved from the Residential Tenancies Act, meaning they won't have the same tenant rights as typical renters, and you can ask them to leave if they are causing problems or you find them uncomfortable. However, use good judgment and treat them respectfully as this is a mutually dependent relationship. You need money and they need a place to live. Suggestion 3, decrease life costs and sell low value and depreciating assets. Roll back on your spending and lifestyle changes. Start looking at what is necessary to keep you going day to day. If you have 2 cars but only use one of the cars about once a week, sell it and drop your partner off at work the one day they need to go in. You'll earn money from the sale and save on at least $1,300 of car insurance a year, which may completely offset a couple months worth of interest. Is your home cluttered with sentimental items? Sell them on Facebook Marketplace. I'm willing to bet you can sell most of your unused items for at least $1,000 and clear up space in your house. Remove your cable package, decrease your phone data plans as you're mostly at home, get rid of the gym membership that you're not using, lower your electric bills, anything that will add up to multiple hundreds of dollars in savings every month. Suggestion 4, ask for other home occupants to contribute and take a side gig. This is code red. The home is at stake. Ask your partner, your teenage kids if they can take a part-time job and contribute a couple $100 a week, which can easily add up to many hundreds of dollars a month. Look into taking a weekend part-time job or a side gig just to earn a bit more money. Suggestion 5, eat into your savings. This should be your last resort, as this is not sustainable for a long period of time, and some would caution against going into your emergency funds to pay for your home. If you're at this point, you may want to begin looking into selling, But if your savings can stretch you out for a couple of years, this challenging period is temporary and will pass. It's likely that no single suggestion here will be enough to solve your problems, but combining strategies, even just for 1 year, should help keep many afloat until rates start dropping again. When you should sell comes down to the amount of risk you're willing to take on as a property or homeowner and how much equity you have in your home. If you're an investor with multiple properties that are causing you to sink fast, look to sell the lowest performing properties. Look at each property as a small business with rental revenues and monthly costs. Don't roll the dice on this. Look to slow the pace at which you're sinking, and once you've done that, try to keep your head above water as much as possible. For homeowners, the absolute priority should always be keeping you and your family housed during these tumultuous times. If you're a homeowner and this is no longer an option, historically and seasonally, the best time to sell has been in the early spring, so try to keep yourself going for the next couple months before cashing out. Thanks for watching. If you want to get in touch, you can reach me by email at johnleerealestate@gmail.com, by phone or text at 647-983-0770, or online at JonLeeHomes.ca. I'll see you guys on the next one.